market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Okay, let's see.
This enormous data set. It is incredibly competitive. So if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So, how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data.
You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of the field will become outmoded by competition or.
All right, we're back up.
When you look at your whole brain, you don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
Another good
Okay, mic check, mic check, mic check.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Mic check.
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
Mic check. Okay, we're good. All right, good.
Companies that are doing
Well,
well,
power got cut 3 times. The first time was about 10 minutes into booting back up. 3 different computers, the live stream. Regardless, the markets are starting to bounce a bit. A little oversold. Looks like shorts covering. More stocks are going green again. We were down to about 70% red, 30% green. Now we're about 40% green. So we're starting to march back up. Nope.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
All right. So back up and running. Interesting thing about, I don't know what exactly happened. Just everything went out at the same time. So it was power, but then it came back up. Started to reboot. Got about halfway through it. Power out again. Had to reboot again. Get halfway up again. And then power out went out for the 3rd time. So they got to be working on the railroad. Got to be working on the power in the neighborhood or something. Line workers. Okay, HPE is starting to look good, now. B pivot. Tony.
And the dollar and oil and gold. Oil is higher. It's at 71.34. That's been gaining. 25.97 is where we stand on gold.
Yeah, HPE, nice ABCD pattern on HPE. This has been the top of the S&P 500 all day. HPE. Hewlett Packard Enterprises. Okay, that's a nice B pivot. You can see these stair stepping lower, these sell orders. Okay, so we're doji yesterday. Maybe this works. Maybe this works.
You know, Goldman Sachs years ago started to get into the more retail side of the business with Marcus, and they took over or initiated Apple's credit card program. Well, they've done an about face on that, as you know. They've been working.
Hewlett Packard up 4.6%. HPE.
More suited for the retail aspect of the credit card and savings business is in discussions to take over.
Did they have earnings or something?
Of
HPE.
It could still take a couple months to get done, but they're in the late stages of discussions. Now, this fits JP Morgan perfectly, as you know, as they are a wide footprint of financial services. Goldman tried this area, went back to their more mergers and acquisitions, IPOs, and trading. So, yeah, a little. JP
Okay,
Morgan takes
earnings
over where,
whispers.
Goldman Sachs exiting in terms of an Apple credit card.
Okay, and then moving on to the news out of Microsoft,
Yeah.
we talked about the buyback.
Okay, they have earnings December the 4th, so they beat expectations. They reported last week. All four metrics are green. HPE, so this one should keep going. Let me just take another look at this. HPE, Hewlett Packard Industries, Enterprises. Okay.
In 2014, the stock is up 1,000%. Remember, he came.
All right, Doji above the 200-day. It's not the craziest pattern, not the best pattern. Excuse me. Let's look at the weekly. Yeah, it's below the 10 EMA, so I'm probably going to step away. HPE trying. Probably the next couple of days we should see something on this one. HPE. So we had at 1 o'clock we had the 20-year auction. Let's take a look at the 20-year again. TLT. TLT is trending. Long way to get to the top if you're going to rock and roll. Long way to the top on TLT. Hewlett Packard. Day traders, perhaps.
When the timing of the first cut was, we got obviously at Jackson Hole, Chair Powell telegraphed it, so now the moment's here. And I guess the debate has really shifted from the pace.
Supermicro trying to change direction. Supermicro. Let's see. The S&P is about to go cyan on TTM. TTM is about to go cyan. SPX, TTM squeeze. About to trigger.
I think a gradual series of 25 basis points
cyan.
is what the Fed is looking to do. I think the debate here is between whether you need to do something emergency, which is the larger ones, or just normalization. And I think we're more in the normalization right now.
Yeah. And look, I mean, the talk is that we're going to see cuts between now and next summer.
Okay, Microsoft. All right, that's one that I would love to do something with. Microsoft. Trying to follow through. Let's see, Microsoft. It's above the 50-day, right? Okay, trying to get back to VWAP. You got a B and C pivot. I like the dips better. If you're going to buy something like Microsoft, I like the dips better.
Over 100 cuts. I mean, right now, obviously they're going to have to revise up their dot. At the June meeting, they only had one cut for this year. It's got to probably push to at least 3 to 4. But are they going to go as aggressive as the
Microsoft? Okay, Microsoft. A little dip there, Microsoft. Little dip. Let's look at the 60-minute. All right, we want the prices to be above the 60-minute 20 EMA. We came back and almost touched it. Okay. Microsoft earnings. Okay, Microsoft with a big, what is it, 50 billion in buybacks? Anybody know the exact number? Microsoft.
Is the data, and I think that's where you have two camps on the FOMC right now. You got one camp that is worried about the labor market, and we obviously have seen some softening. Unemployment has went from 4 to
October 29th is their earnings. Microsoft. This gets above this volume. If it gets above this order block, we could see a follow through. 442 overhead. What was Money Magic levels on this one? Okay, so Money Magic levels on.
So really the data, you're right, it's been going back and forth, but overall the economy is in pretty solid footing, and that's why I think they really want to stay somewhat gradual and methodical here, and it gives them the leeway or the optionality. If they need to do more, they could do 50 at a meeting if the data trends in that way, or if they wanted, if the data is continuing to go on this trend where it's somewhat in line with expectations, they can keep with the 25. I think at the end of the day, they're cutting. It's just the pace is really going to depend on the evolution of the economy and the data.
There are some people who think they're cutting just to cut because they haven't cut in so long. It'd be the first cut.
Okay, so Microsoft.
It'd be a mistake because inflation could pop up once again. In fact, then they'll have to take it back and raise. What do you think about
435. Okay, so above 435, we got 440 overhead, David. So if you're looking at Microsoft, you need to get above 435, the 435 call wall. If we can do that in the next few minutes, next hour or so, maybe we got a trade 2 hours to go. Just a little bit less than 2 hours ago, Microsoft is trying to do something here. I'm going to set up an order to buy Microsoft if we get a break higher. Okay, Microsoft trade. Microsoft, let's do at the money calls. I'm going to go out. Microsoft, October 29th is earnings. October 29th, they have a stock buyback initiated. Okay, so who knows what the actual 440 is the next level.
buy, sell, hold? What should they be doing right now? I mean, tech, for example, is well off the highs.
Okay, so we got to get about 435, David. The way this order block is situated, we need to get through 436 first. Then we could hit for 440. We got an order block at 439, and then 440 is the upper call wall. So with earnings out a ways, I don't want to take on a whole lot of risk because I know that the Fed is tomorrow, but we could get a gap up tomorrow. Microsoft. Where Microsoft 435? Why are the calls so expensive? Oh, those are the weeklies. October 11th. Yeah, the calls are really expensive on Microsoft. 440. Holy smokes, what's going on here? Microsoft got really expensive. Okay, next week, the 20th. Okay, those are still, they're more reasonable. 440 call. We're at 435. So 435 by a vertical 440. 435, sell the 440, 240 debit. Okay, I have this ready if this starts to go. I have this ready if this starts to go. I'm looking for Microsoft to push through this area.
All right. Jason England, great to see you at Simplify. Thank you.
Thank you.
Coming up, Options Corner, Tom White is standing by. He will highlight unusual options activity from the day, how investors are looking to trade on recent news of United Airlines, Intel, Roku. We'll be right back.
All right, so watching this level right here, if we can get through here, David, we should see 440, I would think. Trying to put together an order here. Okay, let me take a couple minute break. I'll be right back.
Available anytime, anywhere, on any device for free. Swap Network.
Okay, so we got supply right overhead. So if we can get through this area, it's only 8% of today's volume, so it's not significant in a big way. What's more significant is this up here at 28% of today's volume. And then over here, we got a 6% level on the 4-hour chart. We were above 435 earlier, so we should be able to regain 435, I would think. The FANG stocks are all turning. Every single one of the FANG stocks has a yellow or a cyan TTM 5-minute. Okay, significance there is the momentum has shifted from bearish, severely bearish, to neutral, to now it's starting to show more bullish. Now, this is a big bear flag on the S&P cash, so just keep that in mind. Okay, S&P cash coming off the low. Still looks like a bear flag-ish right there. I don't know. Maybe we turn the corner. We're above 5,600, so that's good. That's a plus. That's a plus. The negatives are piling up, though. We've got the Fed tomorrow. We got triple witching OPEX on Friday. 200 billion in single stock gamma calls, call deltas. 200 billion with a B, Bravo billion, versus 50 billion, 50, 4-to-1 calls versus puts. So what do you think they're going to do? Well, the dealers have incentive to get the markets to pull back. Looks like people are taking profits. We're right at resistance, so that makes a lot of sense. Okay, so S&P is right at, you know what? We should look at the S&P equal weight index too. All right, so here we are. Okay, so technically, if we can get a little bit higher, we'll still have a bullish bias for tomorrow. The problem is we got a VIX expiration tomorrow. We get the Fed tomorrow, and we've got a triple top with higher lows, printing higher lows on the daily, printing up into a triple top with major resistance overhead. I just don't see it. I can't see that the markets will break higher before at least coming back to the 50-day. We had a solid week of buying last week. That gave you an opportunity to exit into strength. That's what I was doing. I know it was getting a little bit nauseating. Sava, thank you, Cooper. Okay, so Cassava's on the move. All right, that's one that Jason likes to talk about every once in a while. Jason over at Three Peaks. Oh, that looks good. Looks good. Okay, that looks good. All right, so you got a tight squeeze. You got MACD stochastics rising, RSI rising. Okay, that looks really good, David. Cooper, sorry. Okay, this looks good. Let's look at this one. Cassava Sciences.
Remain below that 57.82 break even, or Nicole, it could be just somebody with a large stock
Okay,
position.
this looks really good.
Money calls against it to create yield on their position. That's doing pretty well this year.
Yeah, I mean, we also think about oil, and that has gone lower recently, so that could help in like maybe the next report, to have less cost on that end. All right, thank you for that one. Next up, we take a look at Intel, which went from $51 late last year down to $18 most recently. So a big swing, but investors have
it looks good.
A nice pop this week, up nearly 10%. You found a bullish trade on Intel.
Yeah, this is all about news driven. You remember the stock last Friday settled at 14-year lows. So it's been under pressure. That last earnings event.
One thing it needs is you need a turn.
One day, that was the biggest one-day drop on a percentage basis.
JBDI, that one got crazy yesterday, huh? JBDI.
The CEO hasn't been doing as good of a job as maybe a lot of investors have wanted him to do. They continue to get out-innovated, not only by NVIDIA, but also AMD. They're lagging as far as the AI chip race goes, so they're not taking advantage of that. But late yesterday, after the close, the CEO, Pat Gelsinger, came out with some commentary about their foundry business. They might actually, they're going to intend to make an independent subsidiary of that where they can potentially take in outside capital to shore up that portion of their business. And then if you look on the other side of it, they have a deal with AWS that's expanding. Right?
JBDI, that looks pretty good. Very risky. This one dropped like a stone. JBDI yesterday dropped like a stone. Trying to reverse. I have no idea what they do. I assume that they're Chinese stock or Singapore stock, right? JBDI, what do they do? JBDI. I'll buy some shares, Cayman, to track it. Okay, I'll track it.
Where JP Morgan and Citigroup basically came out and said, maybe this isn't the best thing that they could have done, but I think the CEO actually did need to do something because he's under fire right now. They're still in the midst of laying off 15,000 people while still taking $3 billion from the government. So a lot of minutia here within this one, but unusual option activity. We did see a call buyer in here today. And this was out in the September 27th weekly cycle. So just 10 days to expiration. Trader bought over 6,000 of the 23 strike calls. Paid an average debit of only 30 cents. Not a lot of option premium in those. So that break even of 23.30 over the next week and a half. That's about 8% above the
Okay.
call volume, about 4 times normal daily average volume.
JBDI, this one dropped like a stone yesterday from $39 down to $2. Was it like 150 at one point? All right, so I bought a couple hundred shares just for to track it, see what happens here. JBDI. Okay, starting to zoom. 60-minute. How many times did it halt yesterday? Okay, S&P 500, watching S&P. S&P cash.
Yeah, definitely. So earlier, late last week, got upgraded out of Wolf Research. They put a $93 price target on this one. And this is, Roku is the aggregator of all the streaming services, right? They're embedding themselves into TVs moving forward also. And one of the key things, I think, why you're seeing this 11% rally so far this month,
Uber has yet to get back above VWAP, but we're watching that one, Uber.
Where you can buy and sell advertising dollars based on what platform you want to be on. They said they're not going to get into the business of creating an OS system, an operating system on their own TV. So that's been a bonus for them. They're planning to launch.
I want my MTV.
24/7, some Major League Baseball games. They did report 11% growth in revenue last quarter, year over year.
Okay. Microsoft trying to do something, needs to get above 435. It was above 435 earlier. It did drop. Microsoft gets back above 435. 440 is the next call wall.
Streaming hours were 30.1 billion. And then average revenue per user actually increased to $40.68. Now, quarter over quarter, that's the same, but year over year, some pretty solid gains in average revenue per user. So seen a nice little bump here in September. And I think traders trying to take advantage of that. We saw a call buyer out here, really short-term positioning in the September 20th weekly cycle that expires in just 3 days. The 79 strike calls. They bought over 20,000 of those, average debit of only 60 cents. So that break even of 79.60 over the next 3 days is only about 6% above the current share price in there with call volume, about 3 times normal daily average volume. So yeah, even taking advantage of the 11% gain so far this month, this trader thinks by the end of the week, we're going to see some more gains for Roku.
Okay, I'm going to post this on Dumpster Dive. How can something go for $35 and then drop to $1, $1.50? How can that happen? Okay, what's JBDI? Do they have anything on it? JBDI? What do they do? All right, looks like I'm going to have to go to Yahoo Finance, huh? Yahoo. Got to tell you, Yahoo Finance giving Bloomberg a run for their money. I mean, they really shoestring budget, it looks like, but they don't have a bunch of people on there talking their book. At least I haven't seen that. I watch them in the morning, and they usually cover a half dozen stocks that may be moving, and they just talk about earnings. And check out Yahoo Finance on your TV. It's on the free stations on mine. .com. Yahoo Finance.yahoo, right? Okay, Finance.yahoo. And let's look up for JBDI. Okay. So what do they do? JBDI. Okay. JBDI. JBDI. What the hell do they do? Summary. Research news. Profile. There we go. Profile. JBDI. JBDI is a consumer cyclical specialty retail. They're based out of Singapore. Engages in the trading of reconditioned and recycling containers in Singapore and the Southeast Asia region. The company offers reconditioning and recycling drums, including top drums, metal drums, plastic drums, blah, blah, blah. Looks like it serves the solvent, chemical, petroleum, and edible product oil industries. Founded in 1983. Okay, so we know what they do now. Okay, JBDI. Okay. I will be taking it easy. I will be taking it easy into tomorrow. So minor excursions into these day trades today.
Details on where we stand. Dolly Lenz, CEO, Dolly Lenz Real Estate. Jenny Lenz, Managing Director of Dolly Lenz Real Estate. I'm so glad you're both here. I mean, they're fully immersed in the thick of it for many years and many successful, transactions as well. That being said, Dolly, what are you thinking here? Because
okay, Meta's on the move. Watch Meta.
I think we do need some semblance of normalcy for that to happen, right? So we need a non-election environment. We need everybody to be calm and not divided the way we are now. I think all of that really is reflected in real estate data. People are jumping into the real estate market if they don't feel calm of the future. Right. Big asset, and it's a volatile asset if they buy at the wrong time.
So the noise of the election is problematic, at least for the moment, because they also don't know what kind of taxes they may be facing, right? I mean, that brings the uncertainty. What are you thinking here today?
S&P trying to push through this level. We don't have a lot of supply until we get up there near 56.48 to 50. Okay, the FANG stocks, a few of them are waking up. Microsoft is trying to do something. Microsoft is trying to move. Microsoft. Microsoft on the move, moving a little bit higher. Microsoft. Let's see if Microsoft can push through 435 by the close. Okay, JBDI, watching that one.
And overall, the home prices, I mean, the affordability is still very much an issue, isn't it?
Netflix trying to push, Microsoft trying to push.
People opening up today, literally, their insurance bills. What happened? Yeah, up 16% over last year.
No, you budget that, you budget increased inflation across the board, and what happens? People can't afford the home, you carry the home. Affordability is key.
Right, and people are gonna obviously put their homes on the market if they can't afford them anymore, which is kind of sad, especially for the older population, right, that thought on a fixed income that thought they could live in their homes. Where will seasonality fit in here in the next 6 months?
That's interesting. So we have seen places like the Hamptons, right? We've talked about the Hamptons, where people are starting to really go all year. So yes, it's seasonal, but they have 3-day work weeks. So they're able to spend 4 or 5 days there. That makes a huge difference.
Even if it's a 4-day work week, right? You leave Thursday night. That's a pretty long weekend. I never had that when I did investment banking. I was in the office every single day. Right. Yeah, I go Friday night and I take the 5 a.m. Hampton Jitney back on Mondays.
Right.
Make sure I get back. To try and maximize at least a Sunday night. So it's true, people do like those second homes even more, not necessarily. And I think about like the spring buying season when people move for schools and things like that.
It's still
isn't the doldrums of winter not necessarily so great for buying and selling homes?
Well, in the Hamptons, it's great.
We always recommend to people to buy when it looks horrible out there. It's a little gray and cold, right? Because obviously you're not going to be competing with as many people, so you're likely to get a better deal.
Tell me about the Fed rate cuts and wealth, and what's the thought here about the housing wealth gap?
Well, we're very excited about the Fed rate cuts. Everyone's talking about today, 25 basis points, 50 basis points. Unfortunately, if it's 25 basis points, we don't think that's really going to do anything because it's already been priced in. We're really hoping for that 50 basis point drop, which could.
Okay, Netflix trying to go. Come on, take. All right, there goes Meta. Meta's popping, changing direction. Meta's changing direction. Watch Meta, folks. Meta might get something going here. Okay, Meta trying to get back above VWAP. Okay, once it gets above 536, we could see a move to VWAP, and then we'll take it from there. Meta, supply overhead. Netflix, Tesla still dropping. Tesla.
Mortgages, where would a mortgage be?
It's like 5.6%. It just dropped today.
Oh, it did? It
Yeah.
dropped again.
Well, anticipation.
In anticipation of what?
So that's why Jenny said it won't go down again.
Right.
And also refinances have been a lot more common, much more than last year. But at the same time, it's not free to refinance, right? So if you
Zim.
are coming down, you're not going to refinance September and then October, November.
Cassava Sciences, that one looks good. From Cooper. Is that DB Cooper?
What do you think we might hear?
I think housing starting to trend up because home builder confidence is up, right? So generally they kind of go together. I think in terms of the other, it's hard to say.
Yeah,
And we're still seeing more new homes sell than existing homes. There's 4 months supply of existing homes.
Remember DB Cooper, the guy who jumped out of that flight in the Northwest? What was it? Washington State or Oregon, somewhere around there. Free falling. Yeah, right.
I mean, the only one that I've seen.
Me too.
Sense is to expand zoning, right? So right now, a lot of areas.
Money for nothing. Chicks for free. Okay, Meta trying to get through this area. Microsoft, same thing. Microsoft. 435. Got to get through 435. We got an order block right here that's holding things down. Looks like they're trying to push this lower. Stair stepping down. You want to see it stair stepping up instead. Okay, do we have that yesterday? Okay, yesterday you can see stair stepping up, 1, 2, 3. Okay, now we're stair stepping down. Can we get a return trip back to the VWAP? In which case we can start to see order blocks moving higher. We got wicks underneath the 4-hour chart over there on the right. Okay, Netflix is trying to push. There goes Meta. Apple trying to go. Google is trying to do something. Google.
I mean, they're really not because they'll watch and see. Okay, so they're better that interest rates go down further.
Okay, I'm at 91% cash in my trading account. Going into the Fed. Currently 91% cash.
Yes. Yeah. I don't know if it'll help that much, but yes, I do.
I don't think 4.5.
No. 4.7? No, I don't think.
Day trading only.
Which is a good deal. Yeah. We went from 3%.
Investments
But one thing we're seeing as a demographic
are fine. Consolidating at highs. Check TRBCX example. Weekly chart.
I'm better off renting. So I really don't know what I want to do in 2 years.
Right.
And if I'm stuck with a house, I'm stuck with a house.
And everything's looking like property taxes are still going up. Whenever you look at your bill, it's always more than seemingly the last time. Insurance, like Dolly said earlier.
Yeah, I bet you do. I bet you do. You could be his son. You could be his son.
Thank you, Dolly Lens, Jenny Lens, Dolly Lens.
All right. Okay, Netflix is trying to push here. Watch Netflix. Netflix is about to bust a move. Okay, Netflix is trying very hard. Change of character, showing up. Chalk plus, equal highs. We could see a liquidity grab here and a reversal. See on the right, you can see the 4-hour chart. There's a lot of supply overhead. If we pop through 708, Netflix, let me go check Money Magic levels. Money Magic, Netflix, Money Magic levels. Survey says 720 is the next level. Okay, 710, 720 is Netflix. All right, so let me just put that on the chart so I don't forget. I'm going to start doing that as a matter of rote or a matter of, I'm just going to do this. Netflix, Money Magic. Okay. Levels are 710, 720. 710, 720 call walls, and the put walls are 690. 690. 690. If you're not using these, 680. If you're not using these, you're missing out on a big part. Okay? Especially if you're trading options. If you're not using Money Magic levels, you are missing out. And they're positioning, the larger positions are positioned bullish on Netflix, Meta, AMD, all of them actually. Everything is, except for the SPY, is positioned for upside, and looks like the Qs. Okay, so the larger positions are lower. That could also mean the larger positions could be sell orders, right? Money? Can they be sell orders? A lot of them?
And track market trends with up-to-the-minute news and insights. The best things in life never change. They just get better, like Hardy's Original Bag.
Welcome back to the Watch List. I'm Nicole Pepperlees, coming live from New York Stock Exchange. Glad you're here with us. 9 minutes
Just what I needed. A rhino and a rhino.
That's pretty funny, David. That's really funny.
The Russell, though, is up about 0.9%. Ben Lichtenstein's with me, senior futures contributor. We have the big rate decision tomorrow. We'll have a special Fed show, folks, so make sure you tune in for that. Give us a look at some potential movers. What are you keeping an eye on?
Yeah, I bet. Fred Sanford, probably one of the funniest people. That show when we were kids. Netflix looking for a move higher.
The reason I talk about yields, first and foremost, the 10-year is because you can see we're off the highs that we saw back in October of last year, up around 5%, and then inching our way
Brother Bill.
into these deep, dark depths below 4% now. Convincingly below 4%. In fact, taking out last week's lows briefly, we touched down to that 3.59 level. And let's just take a step back, because while you can see a pretty well-defined move
Okay.
you're going to see that, well, we're kind of reversing what was a trend up into those highs, starting to roll over a bit now. Again,
Okay, so here's Netflix. Okay. Netflix. Okay, let me just pull this over from.
Again, that's really where the debate comes into play with yields coming off. And I think of both contributing to the stock market move up. We've seen S&P's down to new all-time highs. You've got not only the 10-year coming off, but also here's a look at the U.S. dollar. Back down to 100.24. So recently taking out lows that we saw back in the end of last year, beginning of this year. We've seen strength in the yen, the euro currency, the British pound, some of the likely suspects.
Netflix desktop.
The 10-year expectations for rate cuts and some of those foreign currencies abroad doing pretty well.
Dropbox.
All right. And then, so we're going to tune in.
Okay, let me do this again. Netflix. Actually, you know what? Let me do it with that overlay. Let me do it with an overlay. Okay. Okay, Netflix looking for a push through this area. Got a bullish chalk overhead. Change of character.
I think this view fundamentals contributing to this risk on sentiment that we've seen kind of playing out. Dollar weakening, yields coming off. I mean, there's multiple factors now. Still some hurdles to get above here, but also just kind of sticking with the technicals, which is, where my line of expertise comes into play. I'll leave the fundamentals to greater minds, but high conviction trade up, sideways consolidation. We've been talking about how this has remained in a bit of an uptrend while we have series of lower highs and lower lows. We haven't really taken out anything significant that was established on the way up. So 74,000 is the upper extreme of this range we've been in. We just came off these lows again from July. We'll call it around 50K. Hey, Nicole, you know how I feel about it. Build momentum through the middle of a range-bound type trade in a bull market where a lower extreme test just failed. It opens up the door for a retest of that upper extreme. Again, we're talking about sights set on all-time highs for the bulls here. Again, still some heavy lifting to do, but the environment's ripe for a nice move here in Bitcoin if we could see stocks continue to gain.
All right.
Okay.
Mm-hmm.
Microsoft still stuck to 435. A lot of calls there, so you would imagine that there's profit taking, which creates supply. Very sticky at 435. We moved above it, came back down below it. Now we're back to it. Huck to it.
Kraken Financial Support is here to answer all your questions. We all need a little help sometimes. 5670 level, like you said, didn't last very long.
Okay, here goes Netflix. Netflix on the move. Netflix on the move. Netflix on the move. Netflix on the move, looking for this to follow through now.
The closing low we made Friday prior, which was a very ugly candle day, and you'd have been forgiven.
Netflix, or watch Microsoft. Microsoft next.
Risk off the table with the way the market acted.
Above 435.
2 Fridays ago, that is now, and the bounce back has been excitable. I'm certainly, I would say, bulls have been appreciative of it, and yet we haven't moved to the new level as much as we would like to.
Okay, there goes Netflix. Let's see what Microsoft can do. Microsoft's about to go. LATSGO above 435 would be good. Meta, okay. Meta.
That maybe a legitimate breakout could have some legs and could put some fear into bears on that. So I'm still watching that 5,400 level below.
Microsoft,
Things get decidedly
Tesla.
a little bit iffy for us. We could certainly revisit the 200-day moving average between 5,175 and 5,200. But I mean, there's a lot of stair steps on the way down the bull to get to that. And I know we tend to make moves, pullbacks a little bit more quickly these days. But I'm going to try and allow that price action to dictate the next bias that I bring into things here. So, of course, looking for a close over 56.70. Let's hear what Mr. Powell has to say tomorrow to kind of give us a little bit of insight.
Yeah, we'll have it here for you, certainly on Schwab Network. We're all pretty excited because this could be, in fact, the first cut that we've seen in 4 years.
Okay, Microsoft looks like it wants to go. LATSGO. Let's go. LATSGO.
In 1 year, it has been an incredible performer. What price points are telling you something?
Well, this one, you're absolutely right.
All right, you got a B and C pivot also on top of that. ABCD pattern. Okay, looks good. ABCD on Microsoft.
Stock started to move out of this after earnings, got out of this little consolidation and bottoming pattern, if you will, and it really gapped up and it popped aggressively. Now, today at the high, or today's price action, I was looking at it about 180% still up, and that's after a 25% retreat to a zone of support around $26. So there's a couple of things going on in the short run here. We've had a nice bullish bounce off of that $26 level. We today moved through the 20-day moving average on our open. That's at 30. And, new short-term traders could look at this move today as a way to balance their downside risk.
Okay.
They might use that 20-day moving average as a way to
C.
consider weakness and any
Microsoft C.
Again, would be a
Resistance.
choose to move on. But if they're short-term and using that $30 level and 20-day moving average, risk reward is still opportunistic if you think from the bull side that you can challenge those prior highs near 35. That might set up favorably. Risk could be as little as $1 for what could now amount to maybe $4+ to the upside. That's a really positive from a risk to reward standpoint. Now, obviously, that doesn't mean the trend has to go that way, but a movement that holds the 20-day here gives bulls enthused. A quick reversal back below the 20-day could give bears the opportunity they're looking to push this back to the average between 25 and 26, and that level we tested about 2 weeks ago.
Yeah.
But a really nice move, and most recently, just today's action, recapturing that 20-day seems notable for short-term traders.
Yeah.
Okay, so we don't have much time left in the day, only an hour and 15 minutes. So, hour and 15.
For the most part, since last year's lows. Tell us about this chart.
Yeah, Fifth Third. I mean, you'd be forgiven if you kind of gave up on it for a while there. It had a rough go of things last year, and then we recently participated in a nice bounce back after in July. Actually, we began in July. That is when Fed Chair Powell noted the strength of the banking sector collectively, suggesting that at the time the group was on strong financial footing. That led the market to not just lift banks in general, but Fifth Third really started to rally off of that. And what we're looking at right now has been a stock that's been in consolidation mode, building an ascending triangle pattern. Now, we, generally speaking, we can't really define it as an ascending triangle until we break out, and we attempted to do that today, getting through $43. But free to validate a potential break.
Okay, Microsoft's got to get through 435.
Points of upside. That's the height of the range that we have seen since we made that high in mid-July. And then the low test we made just about a week and a half later at around 38 or so. So we've got that $5 range to work with from a measured move standpoint.
Okay.
Above 43.
Okay, a little pullback in Microsoft, so too much for Microsoft at the moment. Netflix trying to follow through. All right, so we're starting to see some red bars show up on Tesla, red TTM bars, so more downside on Tesla. Supermicro looks like it's going to bear flag and drop off. So does NVIDIA. Netflix, no follow through. All right, so they're selling into strength. Oh, shit, there goes the markets. Okay, so much for that. Okay, resistance still at that volume by price. Upstart on the move. Okay. Hi, where'd you come from? Where'd you come from? Missy? Kitty cat came to visit. Where's your sister? She's not here. What do you want? You want food?
Unlock support from the Schwab Trade Desk. Our team of passionate traders who live and breathe trading.
All right, Microsoft watching that. Needs to get above 435. Not today, not right now. Okay. Okay, the way the markets are acting, I have to tell you, I'm 91% cash in my trading account, and my investing portfolio, different account altogether. I don't know the exact number, but I'm close to 70% invested. Okay, TRBCX is one name. TRBCX is one name. If you look at the weekly, you can see that it's just consolidating. So if you're an investor, this isn't doing much in terms of bullish or bearish. SPY, the dividend ETF, SPY dividend ETF back up to the highs. SPY D. Okay, so this is SPY D. This is the high dividend ETF, SPY. Okay, so if you're looking at this as a potential trade, SPY D, the dividend ETF. Okay, it's at highs. TRBCX, the T. Rowe Price Blue Chip Growth Fund. This is investing time frame. I don't do much with this. We bought back here in 2022. We took half off into this pullback before the pullback occurred. That was prior to the issues with the debt ceiling negotiation. We wound up breaking out, and then I took another half off, so that left me with a quarter. I'm still in a quarter up here at the highs, so depending on what happens, I could always sell a quarter. But that was 100% move from late 2022 up to that high, 100%. So scaling out into strength, that's investing time frame. So I'm about 70% invested, I guess, somewhere around there, 70, 75%. Haven't looked lately, but there's no reason to be that concerned at the moment. Okay. T. Rowe Price. Okay, so back in 2022 is when we got into this. Derek, Rob Hood, and a bunch of people bought back here when we went through the accumulation phase, phase one. Moving averages move sideways. Price doesn't make new lows. We start making new highs. That's phase two, markup. And we're still making higher lows. Okay, still making higher lows. That was 100%, 100% gain. And now we're just chopping around between 170 and 195. Pretty wide range, but we're above the 10 EMA weekly. So let's say the Fed comes out tomorrow and the markets don't like what he has to say and we start to trend lower. I'm already out 3/4 of my position, so I would just take that off. If it looks like we're going to test 170, if we start to turn back down below the 10 EMA, or I could just leave it alone because more than likely we're just going to chop around like we have been for the last 6 weeks. So I'll probably leave it alone. Okay, Microsoft back down to 434.20. Okay, the New York FANG index stocks don't look that great. So my 2 cents is that they're selling into strength. They started selling into strength right out of the gate this morning. We briefly went up a little bit higher and then we rolled over. We had a 20-year auction, which I didn't hear what Mr. Santelli had to say, but I would think more downside.
So if you look back in the 1970s, that was a rising interest rate environment. And the Fed funds rate went up to 22% on a daily basis, 19% on a monthly basis. Imagine 19% interest rates, and that's when gold went up by a factor of 25. So, yeah, as those interest rates go up, I want to ask you, David, tell me a little bit
Okay.
about your thoughts on where gold is headed. Are we going to see 2,700 not too far away?
Yeah, we've thought that 2650, 2750 was very reasonable by year end. And with the following through, you can see as much as 3,000. I think that if you see a 50 basis point drop in rates, you don't.
Yeah, Redfin was perky last week too. Did it come back a little bit, Redfin? All right, that's going to continue more than likely because interest rates are coming down. Okay, yeah, it looks good. I like it. Redfin might be worth a shot. Redfin.
GLD is about 30% lower in terms of total holdings from where it was in 2020 at the interim market peak at that level. And you're seeing a variety of ETF products, the ones that trade as closed.
Do they have options? I'd rather trade options in the money.
There's not a lot of activity in the space relative to the price.
RDFN. Maybe Leaps, maybe out in January 25. Redfin. Yeah, they're not that expensive. What are the deltas? The deltas at the money. The 14 call in the money. 14 call is what? Should be a 65 delta. Okay, so it's only 350. Split that for 340. Maybe you want to sell $5 out of the money, maybe. Okay, let's do a vertical on Redfin. I like the idea. Because interest rates are coming down. 14, that's 55 cents. Buy a vertical. 14. Is it even worth it? Let's see, 14. Let's see, 14 and sell a couple of dollars out. 4 or 5 would be a 19. $1.60 debit. Okay, I'm going to go ahead and do that. See if I can get filled.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political.
Redfin, I like the idea.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed.
Rates coming down.
Tune in to our election coverage on Schwab Network.
Real estate.
The market is a multi-trillion-dollar.
Bullish.
When there's profit there, you take it. That's always go through my head.
My job as a trader is to
Okay, what's RKT doing? Is all the stocks in the group? Or all the stocks in the group? RKT as well? RKT as well. Okay, it looks good. Who is this? CMC Energy. Okay, Microsoft, 435, 440 are the call walls. Okay. 435, 440. Okay, so we got to get above 435. Hopefully, we can do that before the end of the day. Netflix trying really hard to get back above 705.
Somewhat interesting, they look at the chart for the 10-year. It's holding its low while the dollar's breaking down to a new one over the last 24 hours. But the 10-year yield kind of holding in from the recent low. Don't want to make too much of it, but there's been a little bit more of a two-way trade. It was straight bond bulls, nonstop, basically, for months. And that's probably still going to be the case. But we'll talk about the possibilities for tomorrow, hypotheticals. We're going to get some of them marked out. I'm going to do some at the end of the show, too. Thinking about the different scenarios for tomorrow and what will respond and how there might be some.
Okay, I'm going to take a couple-minute break. Watch Microsoft here, Netflix. Okay, Netflix is trying to break on through to the other side. Netflix. Okay.
But one of the other things I'm still watching, I still give credit to it as a sign generally of risk on, risk off. I think Bitcoin's still got a role to play. It hasn't been as obvious lately in its indications, but still, when you see a 4.5% pop on probably the most dead money in the market, which has basically been crypto for months.
What do you want? What do you want, kitty cat? Kitty cat's trying to get my attention. All right, let me take a couple-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We got 55 minutes left in today's session. It is Tuesday the 17th. Tomorrow we got the Fed, so I'd be reducing my exposure in the markets. If you're swinging anything, maybe we take those off in the morning. Netflix, Microsoft, that kind of thing. If you're thinking it's going to gap up tomorrow and then fade again, possible. We're right below major resistance on the S&P, so I don't see a move above 56.75, 5,700 tomorrow. Do you? I don't. Okay, I'm looking for resistance in this area. Netflix. Where's Netflix? Netflix. Oracle, Meta, Elvis, Google. Don't forget Elvis. That had a nice looking chart. Trend break. Kitty cat wants attention. Let's see. Leader for Elvis.
I'm not gonna go down that path, Kev, but you know what I mean. Like days where Intel leading, you get some of the other stuff. It kind of tends to be our less powerful days, right? Our most powerful days are when Jensen gets everybody psyched up.
Yeah, Intel. The day the headline reads Intel leading the market higher.
Yeah, that's when you're looking for the fade.
Yeah, hold on a minute. Why is Intel leading the market higher? So, you know, we covered Intel today, and the story about Intel,
it's fine.
It's fine. It's a $22 stock,
right?
That used to compete very well in all these spaces, and now day to day, week to week, month to month loses to AMD in terms of chips.
Yeah.
So much so that they're adjusting their the business model,
and so much so that the days they're up, semiconductors are down.
Yeah,
So it's almost like it's inverted.
And why is it up? Because they're getting a gift from the government, right?
Sure. Well, I don't know if you want to talk. Yeah, something like a gift.
But look at I think to speak to that, look at the winners of the S&P 500 today. I mean, you got the underperformers of the year, your Airbnbs, your Modernas,
Great point. There you go. Okay,
American Airlines. I mean, these are all it's like this forgotten trade.
Energy.
I will say to give energy some credit.
It hasn't been good.
It hasn't. So yeah, and obviously not energy, but APA, there's still like an interesting, I'd say, sentiment around like what is working today, and it's everything that hasn't been.
Yeah, well, that's kind of one of the things we're exploring.
And Bitcoin.
If we deliver, yeah, sure. If we deliver 50, and this is going to be some, big shift, that's kind of where the Russell, the more speculative days come in. But it's just that we've kind of been playing this game for a couple months, really since July. You don't want to trade the other stuff for the NASDAQ, but it doesn't have to be zero sum. GDP estimates are getting revised higher right now. Atlanta Fed today, Kev. So that's kind of a thought here, is that maybe we don't have to have a zero sum notation anymore like we've had the last 2 weeks. If we're going to cut 50 and GDP is going up, everybody wins, right?
How will Jerome Powell explain cutting 50 basis points with GDP going up? How will he do that?
Well, we might find out tomorrow.
How will he do that? And think about this. Here's your thought process.
Point to a chart of the PCE.
What would
Okay, Elvis. Okay, Netflix. Let me go check Elvis again. Elvis. I really like Elvis. Can afford to wait one more day. Wait for the Fed, I guess.
Thankfully, we had like crazy Middle East conflict. And crude went down.
And because the inflation narrative, remember, what dominated the inflation data this month? Energy.
Yeah, that's true. Yeah, we had a lot of positive force from energy. I mean, positive in for inflation.
Not apparel, not housing, not food.
Right.
All higher.
Okay. But still, I mean, in fact, we're going in this tomorrow, 63 to 37. So, I mean, we're all betting men and women here, right? Like that right there says, if you believe the market,
So if I
he
say,
does what the market does.
if I take quarter, I get 2 to 1.
Sounds about right.
Is that what you're saying?
Yeah, I'll take those odds. Yeah. You know what? I'm excited because I like tuning into, forget about what happens at like 1. I like what happens at 1:30. I want to hear him get good questions,
Yeah.
and I want to watch the market then, because to me, that is really the market moving event. It's not so much when we get the actual news, it's how he then conditions that, how he basically frames that to the market.
You're 100% right. And by the way, I think that is a really important statement, actually, because usually what happens on Fed Day is just things get confirmed. A lot of times vol comes out, and you generally have kind of like, selling of the news in a way, I mean, like figuratively, generally. So the fact that we don't know what's going to happen tomorrow, where both moves are live, then this could be a very different event in which we do get some fall. But it is kind of the highlight of the week. Real quick, Kev, what do you think? We're going to get some action?
Delivery mechanisms in the markets usually comes out favorable.
Usually comes out favorable. Sure. All right, nice. Thanks, Senor. Thanks, Kevin Hayes, for a look at the market action today, as well as some preliminary thoughts there on tomorrow. For that, let's go to Mark Down. He's author of Behavioral Macro, regular here on the Schwab Network. Great to have you here today, Mark. The last look before tomorrow. What do you think?
Okay, Elvis looks good.
It's going to be like an affirm the usual sell the news thing.
It's always going to be fun. That's for sure. We overreact often in multiple directions depending on the time frame. But from a longer term perspective, I think it's hard to imagine.
All right, Microsoft trying to get back above 435. That's been the task for the evening session. S&P squeezing. Okay, I'm going to take a couple of minute break. I'll be right back.
They need to later. They don't have a lot of scope to do it. And if they cut 50 now, it's pretty easy to argue that inflation has come down a lot, and we're
markets could live with. I don't, because to your point, we've been in this holding pattern for 14 months now where we haven't seen cuts at all, which is unusually long. And so a big shock to the system would be an interest rate cut, anything bigger than the smallest possible required cut just to start the easing cycle. So you can always add to it. It's really tough to take it back once the toothpaste is out of the tube, though.
Cheryl, in portfolio terms, what does it all mean right now? I mean, what would you be telling clients about, where we are in the cycle, whether you feel like this bull market is in a fragile position? Are we okay? How should we set expectations for the rest of the year?
Yeah, I think that's really.
Sorry, Malcolm. Cheryl is going to jump in on that for a sec.
Sorry, Malcolm. We'll give it back to you in a second. I really think you have to ask yourself at any of these juxtapositions whether something has materially changed. And look, the markets are, the Fed fund rates is at a 23-year high.
Yeah.
Jobless numbers are at a 3-year high. So you have to look at this and say, yes, something has materially changed. So what has worked for the last year, 2 years, may not be what is going to be working going forward. And I would love to say I still love my technology stocks, because if I sold them all, I'm going to get crushed in taxes. My clients would kill me, right? We have to think about the overall tax effect. But I do have to think that there has to be some rotation. Technology has been on such a tear. The valuations are too high. And the story has changed. What has done well during a flat rate environment or a rising rate environment, which is what we've had for the last decade and the last 2 years, is not necessarily what's going to perform well during a declining rate environment.
Malcolm, I know you're an owner of some of those big tech stocks. You can kind of weigh in as what we were saying before about the portfolio approach, but also, Microsoft, for example, out there been one of the leaders for years.
Yeah, I think it makes logical sense to say that rotation now is finally the setup. We've been asking, when is this rotation, this broadening going to happen for more than a year now? And I think you could make a logical case that maybe it's time to rotate into things like financials and energy and so forth. But I also think in an accommodative rate cycle, it allows for some of the other tech names that haven't really participated to the level of the hyperscalers to actually now borrow to invest in artificial intelligence, because they don't have the fortress balance sheets to do it on their own, like say an Apple, right? You have HP, you have IBM, other names that need to invest in refreshing their hardware today and integrating AI into it so that they can get ahead of where their customers are going to be looking to them for those baked in AI solutions later. And so I just don't think that it's necessarily a foregone conclusion that today is the day or tomorrow is the day that we say we turn away from tech altogether. And maybe it makes more sense that we're broadening our holdings inside of the tech sector more likely.
Yeah, well, I guess if we're going to get a full rerun of the whole internet run up, we need leverage to capex investment in tech, because that was a big part of it back then in that final phase. Liz, you suggested that we're in this kind of maybe delicate equilibrium here in terms of the economy, kind of slowing to a point where you think it's going to lead to a downturn. Is there a way to avert that? Is the bond market telling us that's a done deal?
The bond market and the stock market have been sending conflicting signals for most of this cycle, and usually people rely on the bond market more, and now it's looked like maybe the bond market has gotten it wrong. Is there a way to avert that? I don't know that there's a way to avert that. When we look over history at the times when in a cutting cycle we pulled off a soft landing, so in the 80s and then again in the 90s, both of those periods.
Okay, it looks like we're getting something here. Netflix is trying again to break structure.
7%. Another time it was at about 5.6%. Both times the unemployment rate was falling. That's not the case today. So when you think about just where we are in the economic cycle and the fact that unemployment seems to be on the upswing, and we're just at that balanced place where we've got about one job open to every unemployed worker, that's what makes me concerned. Usually when you draw the correlation between cutting cycles and the unemployment rate rises pretty clearly and actually pretty dramatically during most cutting cycles, except for those two periods when the labor market was strengthened.
Yeah,
so I just don't think the conditions are present for that to
I'm
happen.
going to circulate a petition to have 2019 categorized as a contingent soft landing, because they did cut, and I don't think that the yield curve predicted COVID. So, but anyway, it didn't play out long enough to know exactly how it was going to go. Liz, Cheryl, Malcolm, thanks so much. Appreciate the time today. Let's send it over to Seema Modi for a look at the biggest names moving into the close. Seema.
Hey, Mike, Hewlett Packard shares are surging here as much as 6% after Bank of America upgraded the stock to buy from neutral. The bank says it believes the stock's valuation is now, quote, compelling, and it sees a slew of positive catalysts, including cost-cutting efforts and a recovery in the AI server market. Shares up 5%. Let's talk about Moderna, among the biggest gainers on the S&P 500 today. The drug maker says its updated COVID-19 vaccine has been approved for use in Canada. The stock is up about 4%. Mike?
Seema, thanks. Talk to you again in a bit. We are just getting started. Up next, we'll take you live to the Future Proof Festival, where Double Line's Jeffrey Gundlach just caught up with our own Scott Wapner. Scott will bring us all the highlights from that conversation, including what Gundlach thinks about AI and private credit. Plus, we'll hear from top retail analyst Simeon Siegel with his first take on today's better than expected retail sales data. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
All right. Watching the markets. Watching the markets. SPY just sitting here at the lows. Thought we'd get more traction. Nope. Don't have a lot of participation. Nvidia's down, Supermicro's down, Tesla's down. So we need Microsoft, Netflix, Apple. Apple's trying to do something right here. Apple. Watch Apple. Trying to get back, pushing off a VWAP. You can see that area of supply right overhead. It's going to run into. If we can manage to get above that, then maybe we can start to fill the gap one of these days. Remember, we have the Fed tomorrow, so I'm at 91% cash on my trading account. About 75%. I was just checking my investments. About 75% cash, 75% invested, 25% cash. So depending on what happens with the Fed tomorrow, if the market, let's say the markets start to sell off and we start a series of days with bearish bias, I mean, I'll start to consider whether or not I want to reduce my exposure or not. But, you know, I'm doing most of the trading right now in the trading account. And waiting for the Fed's reaction, the market's reaction to the Fed, rather. That's all we can do. Like, everybody's trying to guess what's going to happen tomorrow, but we won't know until tomorrow's here.
I mean, the relative performance of Bitcoin has been worrying. If you're a Bitcoin bull, I'm not. You know, I'm still waiting for it to solve real life problems. But I mean, fundamentally speaking, right? Obviously, line goes up, line goes down, and you can trade those. You can trade those things. But fundamentally, there's still really nothing there. But it's been interesting because all the major equity indices are pretty much back at all-time highs,
Exactly.
and Bitcoin hasn't been able even to get back into really and hold it into its 60 to 70,000 range that it was stuck in for quite some time, and that's a worrying sign. The miners have also gotten trashed, and they're nowhere close to regaining those ranges they broke down from. And there's kind of it's like enthusiasm is draining from crypto because the promises keep not happening. And yeah, there's some hardcore guys that they're still looking for the number to go up, but it's just not a super compelling story. It hasn't proven to be. I mean, at least gold has gone up, right?
Yeah.
Bitcoin has kind of stopped that. So it's a little bit worrying if you're a Bitcoin bull to see this relative underperformance. Sure, if stocks go up, Bitcoin's going to catch a bid, but I wouldn't get interested in Bitcoin trading the long side unless and until I saw it start to show some relative outperformance to the NASDAQ, which is usually what we look at most closely. And we haven't seen that yet.
Great stuff. My gauge of job well done by the Fed is stocks solid, economy solid, crypto down. That's check to me. You've extracted.
Yeah, no, it's pretty good. Listen, most importantly,
yeah,
they pulled off. Really, they landed inflation without a recession, and many people thought that couldn't be done.
Yeah.
And so, well, I mean, by now, when inflation is back at 2, it's going to be within a couple numbers drop out of the time series, and we're going to see it there. And we haven't had anywhere near the spike in unemployment that people said was necessary to get to this level of inflation. So, good job. Well done, then.
Great analysis, Mark. You know, I'm a little bit more so I got 3 months left on the thesis. Appreciate it, Mark.
All right.
Thanks. Yeah, Mark Hopper of Behavioral Macro. Great stuff from Mark. We're going to come back.
Yeah. Come back.
So we have really one of our best performance years ever
Gunlock talking. He's been talking sense lately. Jeffrey Gunlock.
To the idea that the curve is going to de-invert.
Yeah, let's take a look at the yield curve because that has de-inverted lately. Okay, bonds. Let's look at the yield curve inversion. Okay, you can see that we're almost, we're back above 0. So the yield curve has inverted, re-inverted. Okay.
This whole AI craze with amazement. So I asked him about that, and he said,
Plus, you got junk bonds at the highs, so that's giving us a mixed signal. Junk bonds at absolute highs.
Terrific long-term potential, tremendous
tremendous overinvestment and excessive belief that it's all good. There's nothing but good. And then you get the crash, and then ones that survive end up to be world beaters. I think that will happen in AI as well. I think the overinvestment in AI is just astounding.
And finally, I asked Jeffrey about one of the hottest areas over the last couple of years in credit, that being private credit. Everybody's been talking about it. Financial advisors have been getting their clients into it. It certainly has been a topic of conversation at many different conferences. Somewhat surprisingly, Jeffrey took that on as well.
Without any doubt, I know that when the first question at a large crowd presentation is over and over again talking about private credit, I say, like, well, you're asking me that because you own a ton of it, right? You're an RIA and you've got your clients all in these funds. And of course, now I think somebody's trying to do a closed-end fund for private credit. You know, it gets weirder and weirder. You know, first someone's so bold as to want $1 billion fund. Then somebody wants to do a $5 billion fund. Now there's somebody doing a $25 billion fund. This is what the top looks like.
This visit today with Jeffrey was so unique here in Huntington Beach.
Okay, Netflix is going. Watch Netflix on the move. We finally starting to see a move on Netflix. Watch your Netflix. Okay, we got a break of structure. Netflix, break of structure. Okay, forget above 708. Netflix above 708 should run.
He spent a lot of time talking about concerns about the deficit and funding it, saying that neither candidate for the president of the United States has a policy that he really likes, that both would be inflationary. You talk
Netflix, sorry, let me just check a few. Let me check Money Magic. We did this already, didn't we? Yeah, we got Netflix over here. 710, 720. Netflix 710, 720.
In a recession because of some of the indicators that he's been looking at over the last many months that would suggest, and he's said this as well with us on this program, that the economy is just weaker than people want to believe.
Well, I was going to actually say, Scott, if you knit together all those comments that we played, I mean, if you think the Fed's going
okay, so here's Netflix.
In the next 3 months,
Netflix, call walls.
They're going to do a little bit here up till now. Clearly, he feels as if there's economic vulnerability to the come to bear, and then we got an AI bubble, and he thinks a private credit peak in the midst of it. So I guess it paints a picture of a lot of fragility there.
He said, and he was straightforward in how he answered this, he thinks the Fed's behind the curve right now, and substantially so. I asked him, so what do you think, you know, how would you grade Jay Powell and company on the job they've done? And he went back to the beginning of when this all started. Said I'd give them an F for, you know, the beginning of the hiking cycle because they started way too late. Then I'd actually give them a B+, A- for the middle because of how swiftly they reacted to raising interest rates in the face of this historically high inflation. But now more recently, because they are behind the curve, he suggested they get an F yet again. We'll see how it transpires. It's going to be interesting tomorrow. I mean, I thought it was pretty telling, Mike, that even in a conversation I had today with Steve Leisman on halftime, he's like, look, usually I know. And this time, I don't know. So it makes it more interesting for tomorrow.
Yeah, well, without a doubt. Tough grader, though. I mean, look, we got 4.2% unemployment. Inflation's back to 2.5. All right, Scott, great stuff. We will get a lot more from you, of course, today, tomorrow. Talk to you soon. All right, retail sales coming in stronger than expected for the month of August. Consumer spending still on the rise in the face of a possible economic slowdown. Let's bring in Simeon Siegel, Senior Research Analyst at BMO Capital Markets, covering retail. Simeon, great to have you on. Let's, I guess, start with the macro. It seems as if, you know, a lot of concerns around aggregate consumer activity hasn't necessarily really fallen away in a major way. A lot of people talking about a more careful consumer. How do you read it?
Hey, Mike, good to see you. I would say what we're about to talk about is going to be a fantastic juxtaposition to the conversation you just had. Because listening to Scott and Jeff, I mean, I'm hearing all this doom and gloom, and I think that there is no question the macro seems worse than it was when everyone was flush with stimulus. But I think whether it's today or whether it's, I mean, we got a whole slew of earnings a month ago, people are still spending. And you and I talk about this all the time without making a judgment call, whether it's healthy or not. the U.S. consumer is overly resilient when it comes to spending.
Yeah. So there's no doubt there's resilience, and yet what we've seen, I guess, in terms of the market and how it's rewarding and penalizing different companies is investors seem to want to hide in the big box stores or the ones that seem to be
Netflix looking like it wants to go.
coverage universe, and where you're finding companies that still seem to, have a decent story to tell.
So I think it's really interesting. I think that what you're describing, if you wanted consumer exposure, there were big companies like Nike and big companies like dollar stores and big companies, just all these global businesses that people were comfortable with. That doesn't necessarily mean
Seven.
And so the question you have to ask, and this is a little bit of a game theory question, it's above my pay grade, is do you look at losing beacons of safety as a game of dominoes, and then you have to be worried about the ones that are still safe? Or do you view them as the scarcity value is just going up? So TJX, the multiple, it's an excellent business. You and I've talked about this one a lot. Can you just ignore the multiple? And so what's interesting is from my conversations with investors, at least for right now, the answer to that is increasingly yes. It's people are watching their core safety elements fall away. And so they're effectively willing to pay more for the ones, classic supply and demand. I think that's the reason. So when I look at it, when I talk to my investors, I'm trying to go again, sell-side analysts are supposed to say the word barbell at least every conversation, so I'll just say it now. The barbell that I'm looking at is call it TJX, that off-price business, which becomes increasingly important, not just to consumers in tough environments. As department stores shrink, they need a place to move them. That's one side, recognizing it's expensive, but it's expensive for a reason. On the other side, my team just did a big deep dive into Under Armour, right? Not the type of company you would put neck and neck with TJX, but here's a business that's incredibly large. People have written it off for dead, which doesn't make sense because of its billions of dollars of revenue, but it's also really sick. And now you have Kevin Plank coming back in and saying, I could do more with less. I could achieve more by doing less. And so in a world where investors are worried about how hard is it going to be to generate another dollar of revenue, I like a business that's actually going to win because it's donating revenues. And it sounds counterintuitive, but some of these businesses just overstretch. Some of these brands dilute themselves. And the best fix is by doing more with less.
Yeah, it seems like sometimes the incremental revenue.
Netflix looking for a pop. There goes Apple. Apple's starting to pop here. End of day, Apple's starting to go. Apple popping. All right, we're into supply. If we get through this area, we could see a run. Apple into Apple popping. Apple popping into 225. What's Money Magic levels on Apple again? Money Magic levels on Apple. Our survey says 217.50, 220, 2715, 220, 217.50.
But October ends up being the second worst month for my group. And it makes sense. There's no catalyst. There's no shopping catalyst.
217.50. 220.
And we're not going to get 3Q. Again, very important holiday period. And so what ends up happening.
All right, 217.50, 220.
Time perspective, all that fear that Scott just brought up earlier, that's going to be what people are talking about.
Okay, those
and second derivative, it's not getting better.
we're above both. We're above both. Okay, so that's pretty cool. Oh no, I'm sorry. I'm looking at the price at the wrong place because it's in here in the bottom. Okay, so 217, 220. Okay. So we're about to try 217.50. Okay, so if Apple can get through 217.50, that would be good. 217.50 call wall. Up here. Okay, that's up there.
Then there are these compelling opportunities. That's how we're approaching it.
Yeah. All right. Well, you have a big drop in gasoline price. I mean, a lot of things maybe could keep the consumer going even longer than many hope or expect at this point. Simeon, great to talk to you. Thank you.
Good to see you.
All right, up next, the CEO of ConocoPhillips joins us exclusively with his take on oil prices and the broader energy sector. And don't forget, you can catch us on the go by following the Closing Bell podcast.
Okay, so we can get through 216.80, 217. We should see a move. Maybe Apple. Bad news the last couple of days, but it is pushing higher. Meta's turning the corner. Apple back above VWAP, but hitting supply. I'm not going to get too excited because I know the Fed's tomorrow, and a lot of people are more than likely using the opportunities to sell into strength, which is what I've been talking about for the last week and a half. We had that bounce last Monday, not yesterday, but the last Monday. We bounced. Let's go take a look at the carry trade, Japanese yen, Australian dollar. Let's see what that looks like. Okay, so that's actually a good thing. Okay, we're turning over. Okay, we're turning over. Japanese yen, Australian dollar pair is turning over. Okay, so that's one good thing. Another good thing is junk bonds. Okay, so this is all giving you an opportunity to sell into strength. Okay, junk bonds at the highs. Do we follow through? Look at it this way. Let's say we do break out tomorrow after the Fed and into Thursday. Let's say we break out and you've been reducing your exposure. Is that a bad thing? I don't think so. What if the opposite happens tomorrow? What if the markets drop off and you're caught holding the bag? As institutions sit here and wait for the markets to sell off. What if that happens? Okay, so yeah, taking profits off in the strength, you do miss some opportunities, but you also miss the selling that could, put a big dent in your account, right? So we have to weigh the probabilities. The probability is we don't know which direction the market's going to go, but we are at highs and we've been making new highs all of last week, or at least moving back up to all-time highs. This is our first day we're going to have a bearish bias if we close down here. With the Fed tomorrow, we've got VIX expiration. We've got a triple witching OPEX on Friday, which is heavily weighted 4-1 in single stock call deltas versus single stock put deltas, only 50 billion. I keep talking about that. That's what Brent brought up on Monday or Tuesday. Actually, it was Monday because today is Tuesday. So you have to consider that there's a very good possibility that those call deltas get wiped out. The puts are smaller. What's VIX? VIX is at the high of the day, I think Corey said, VIX. So going into the Fed, we thought that we could see a pump into the event premium. Okay, VIX expiration tomorrow. So do we see a pump back up to 23 over the next several days? It's a very high probability, I would think. Bollinger Bands are tight. We got the event. Is it going to be a nothing burger? Everybody expected 25. Do we get 25? I say everybody, but a lot of people are expecting 50 basis points. CME Fed tool. Okay. The Fed Watch tool.
It's been a rough year for oil and gas.
Okay, so tomorrow we get the Fed decision. Okay, there's a much larger group that think we're going to get 65% thinking the rate 5.25, 550. Ooh, let's see. 475.
Distaste or dislike for a lot of the oil and gas companies that are out there. The price of oil goes down. So let's dig in a little bit.
I'm taking profits off into strength. That's what I'm doing. Reducing my exposure. Trading account, 91% cash at the moment, 91% cash. I'm more than happy if the markets take off to the upside after the Fed tomorrow into Thursday. That would be great. I would love it. I'd be able to take a little bit more off and then reassess the markets on Friday or even Monday next week after OPEX, triple witching. Don't you think that's a higher probability for your investments and for your trading? I don't know each of you's individual circumstances, but what I'd be thinking is, what happens if I'm wrong? What if I'm right? What if I'm right and the markets pull back? Am I prepared for that? Am I positioned for it? If you're thinking about hedges, they're on the bottom of the watch list. So you don't have to fumble around and try to find a hedge if we do start to move lower, or you could buy puts. But yeah, what if we're wrong? What if we're wrong and the markets pull back a lot? What if we're wrong and the markets pop? Okay, so we have less exposure. So what? We're into this for the long run, right? We're into the markets for the long run, meaning, 1 or 2 days are not going to make a difference. Once we get a clear direction, like the first week of August, when the Japanese yen, Australian dollar pair reversed, we got this big bullish trend for 2.5, 3 weeks. You miss 1 day. So what? Up here, what if you miss 1 day? So what? We know that the call wall's at 57.50. So what happens if we pop above 56.75? What if we take out 56.75 and we start to head towards 57.50? If we head towards 57.50, then what will we be looking for? We'd be looking for the call wall to shift higher. All right, let's go take a look at the call wall. Okay, let's look at this. Okay, so what if we start to bolt higher? Okay, here's the S&P. Okay, strikes on the S&P. Okay, 56.50. All right, let me just check this real quick. Okay, we're currently trading 56.28. 56.28 is where we're trading. 56.28. Okay, 56.25. All right, so we're above this little node in between these two major nodes, okay? 56.25, we're trading 56.28. As long as we stay above 5,600, we're bullish. If we drop below 5,600, we're bearish in our bias. We're currently positive gamma slightly. 56.50 is overhead, and then you get 5,700, 57.50. Look at this one way out here at 6,000. And look at the put starting to grow at that level. You see that? 6,000 is growing. So what if we are wrong and the markets jump above 56.75 or so and start to head towards 57.50? That's great. Then we can reposition. And we'll be watching for that strike out at 6,000 to grow, both puts and calls. The calls are orange, the puts are blue. But look in between. Look between here at 5,700 and this level here. Look, there's hardly any puts in this area. That needs to fill in, like over here. That becomes support, actually, as we pull back. And then we start to bounce. Put holders will monetize their puts. They'll take them off. The dealer can then reverse the trade, take their short puts off, maybe buy the underlying. We start to see a little vanna trade as the markets move back up. So we want to see more puts. Don't be afraid of puts. We want to see more puts over here above 56, 5,600, 5,700, 5,800.
Time to do something, whether it's 25 bips or 50 bips, doesn't make a huge difference to our company. Again, we invest through these cycles, and we're investing for decades to come, and that's what's important to our company and the growth in its development.
Ryan Lance, ConocoPhillips, great discussion. Ryan, we appreciate your time. Thanks for joining us here on CNBC. Michael Santoli, I don't know if you heard, there's a Fed decision tomorrow.
Yeah.
You heard it here from breaking news to you.
We appreciate it. We'll be here. I may just stay right here for it as we get within 22 hours of it. Brian, thank you very much. Thank you, Ryan Lance, as well. Up next, we're tracking the biggest movers as we head into the close. SEMA standing by with them.
Mike, an online sports betting company is winning today and up big. We're going to tell you why after this short break.
IWM, okay. Okay, we got a $4.4 million trade on IWM. The November 230 calls. Let's take a look at that. November 230, IWM. Okay, back up to the highs. November 230. All right, somebody's betting big. I'm not going to do it. I'm not going to take the trade. More than likely it works. Rates are going to be moving lower, so you would think that the IWM would be moving higher. Maybe we gap up tomorrow, or we hold this level over here on the right. Okay, 230. Let's go look at IWM. IWM. With lower rates, small caps should perform better because they take on debt at higher rates because they are smaller companies. They don't have the facilities some of these big cap companies have. So they have to take more risk. So if the rates come down, you would think that small caps will move higher. Same thing with growth stocks. Right now, Apple's trying to hold on to the evening session high. Netflix is trying to negotiate above 706, but it can't seem to get through this area. I don't see any reason for traders to take on a lot of risk at this point going into the Fed tomorrow. So we got 16 minutes to go, 60 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday the 17th, Fed tomorrow. We got a VIX expiration. Didn't do a whole lot today except take profits off into strength. I did take, let's see, what's Uber doing? Uber, did I get stopped on Uber? Let me see, Uber. Uber, it's hanging on. Okay, so Uber's hanging on. Okay, let me just check to see if I got stopped or not. Uber, trailing stop, Uber, monitor. Uber, where are you? Uber. There it is. Okay, Uber. Okay. No, I didn't get stopped. Okay, so I'm down $23 per contract. Okay, so looking for Uber to continue. Okay, let's look at Uber. I'll give it another day. Uber, maybe it continues. Okay, we're right up against supply. We're watching this order block right here. People covering, shorts covering end of day. Okay, so I got order blocks right here. We're right in supply. If you can see over there on the right on the 4-hour chart, we're right up into supply. So some resistance there. Okay, Netflix looks like it wants to do something end of day. Starting to cruise higher. Netflix, watch Netflix.
14 minutes till the closing bell. Let's get back to SEMA for a look at more key stocks to watch.
Michael, let's start with shares of AppLovin up for the fourth consecutive day, hitting a new all-time high. The mobile software company getting an upgrade at UBS to buy from neutral. The bank citing opportunities for AppLovin in the e-commerce space as a potential catalyst. The stock up nearly 7%. Flutter climbing to its highest level in more than 3 years. It's the online sports betting company behind FanDuel that says it would buy Playtech's Italian gambling business for about $2.5 billion. It also announced a major deal in Brazil last week. So that momentum is behind shares up another 2.5% today, Mike.
All right, Seema, thank you. Still ahead, GE Vernova shares jumping thanks to a key upgrade from one Wall Street firm. We'll break down that bullish call. Coming up, closing bell. Be right back.
Okay, so I'm getting some DMs from many of you that are at high in their cash balances and their trading accounts. That's good. That's good. So what's the worst thing that could happen? You miss a rally, you miss a pop in the markets. So what? So what? You're here with some of you at more than I have cash balances. I'm at 91%. I'll probably be closer to 92% if I close a few more trades into strength. But what's the worst could happen? You know, I miss a trade. That's okay. I mean, let's take a look. Let's take a look at a couple of examples of what I'm thinking. Not that it matters what I'm thinking, but just want to point something out here. Okay, so Uber is one that we talked about today. Okay, let's take a look at some of the stocks that are leading on the markets. Maybe Enphase is better. Maybe Uber's fine, but it's above the 9/21/50 200 days, so we're good. MACD's turned up, so Uber's fine. It's a small position anyway. If it works, great. If it doesn't, you know, I get stopped out 60 cents per contract. Okay, let's look at, all right, Netflix. Let's look at Netflix. Netflix looks like it wants to go. Okay, triple top. If it gets above 7-Eleven, my daughter's birthday, 7-Eleven. If that gets above 7-Eleven and we continue, all right, so I miss, a day. Let's look at the weekly. Weekly. All right, looks like a double top breakout too on the weekly time frame. We're already breaking to new highs. The 10 EMA is pointing up and to the right. Okay, is the 10 EMA pointing down and to the right like over here in 2021? No. So there's no risk. There's some risk, but there's no risk from my perspective. If you're a swing trader, this is a death knell. Okay, you don't want to be taking swings. You definitely want to be taking stops when your stock runs up and loses the 10 EMA. That's your stop of last resort. So you take your whole position off there. When the 10 EMA is rising, you're buying dips and selling rips. If you're a swing trader, okay, so you buy a dip and you look at every day as a new day, looking for a bias. Okay, if we close up here, you're going to have a bullish bias for tomorrow, just by virtue of the fact that we made a higher high and a higher low. We're above yesterday's high low. So you've got a bullish bias going into tomorrow. So let's say you don't have any Netflix and it pops up tomorrow. Would I chase it? No, I'd wait for a dip. But I'd definitely be bullish. Bollinger Bands are opening up, RSI is rising, MACD stochastics are moving higher, and volume looks good. Okay, so this is a bullish continuation. You've got the 9, 21, 50, 200-day moving up. Well, the 50-day is flat, but the 9 and 21-day are up and to the right. So is the 200-day. So if Netflix starts to stretch its legs, which it looks like it wants to, you're going to have a bullish trend trade. Okay, let's look at a few other ones. Let's look at Las Vegas Sands. We made a big deal out of Las Vegas breaking downtrend. Okay, Las Vegas Sands is breaking the trend. So it looks like with the trend break, we're starting phase 2. What if we come in tomorrow after the Fed or even Friday, Thursday, Friday, and the markets are moving higher? Okay, we miss a day or two, but you still got about a 15 to 20% move in store over the next few weeks on Las Vegas Sands. It's just breaking trend as of the last couple of days. Wynn Resorts, same thing. Wynn is also breaking a downtrend. So you miss one day, so what? Wynn Resorts back above the 10 EMA. Okay, so Las Vegas Sands is above the 10 EMA. I don't think so yet, right? Yes, it is. Okay, so Las Vegas Sands is above the 10 EMA. Okay, so you have higher highs and lower highs and lower lows on Las Vegas. So on the weekly, about to change trend on the daily and the weekly. So this is a high probability setup for a swing long going into year end. You've got the banks, you've got the hotels, you've got the cruise lines, you've got airlines, you got the travel and leisure stocks, the travel agents, bookings. What's bookings doing? BKNG. That one's the one that Russell likes to trade. Booking, trending higher. Booking. Okay, you got TripAdvisor. All of these are doing the same thing. Well, Trip not so much. Expedia above the 10 EMA. You see what I'm getting at here is that the whole sector plus a lot of other stocks are moving in the same direction. What about Marriott hotels? Okay, back above the 10 EMA. What about Hilton, HLT? Above the 10 EMA. So what are the probabilities? Probably we're going to move higher. Okay, there goes Netflix. Netflix on the move. Netflix. Okay, Netflix weekly. And there you go. There you go. Netflix is breaking higher. There's your a fair value gap right there. Could come back, but it's in the evening session. So look at the supply over there. Okay, Netflix pushing higher. Okay. We get above 708. This is going to go. LETSGO. Okay. Netflix. Okay. Looking better going into the Fed. And don't forget your call walls overhead. Netflix. Giddy up. Okay, we've got 6 minutes to go. 6 minutes to go. Netflix with 5 minutes to go.
We are now in the closing bell market zone. Angelica Peebles shares what's putting pressure on Novo Nordisk today. Plus, GE Vernova hitting record highs for a fifth session in a row. Seema Modi has the details. And Axana Capital, Peter Cicchini, breaks down these crucial moments of the trading day heading into the close. Angelica, talk to us about Novo Nordisk.
Yeah, those shares are down about 3.5% today, and that's after Senator Bernie Sanders saying that generic drug makers could sell Ozempic for less than $100 a month and still make a profit. Or okay down for Novo's CEO testifying before Sanders' Senate committee. So this is a preview of what's to come when he testifies. Also today, a Novo executive reportedly saying it's, quote, very likely Ozempic will be one of the next drugs that Medicare will negotiate the price of. Remember, Medicare recently getting authority to negotiate directly with drug makers on some drugs, and analysts widely expect that Ozempic will be in the next round. Now, I did reach out to Novo, and they, quote, can't speculate on which medicines will be selected for future negotiations. So we'll see what happens when we get the next list in February. Mike?
We will. I note Lilly down almost 2%. Who knows, perhaps related to that. Angelica, thank you very much. Seema, incredible move since the spinoff in GE Vernova.
Yeah, absolutely. I'll let the
Boom.
Today are raising their price target up $200 to $300 a share. You don't see that often, citing the acceleration in U.S. electricity demand, driven in part by growth in data centers, and how that will drive GE Vernova's gas-powered business.
Okay, Apple going. Watch Apple. Last couple of minutes of the trading day. We got 4 minutes to go. 4 minutes to go. I'm your host, Cuzzavetti, coming to you from theclosingprint.com. We do have the markets turning. Turn. The birds. To everything, turn. There's a season. Turn. And a time to every purpose under heaven. A time to be born, a time to die. Turn. That was a great song. The birds. The birds. The bird. The bird is a word. All right, folks. I hope you had a good day. All right. So tomorrow, at least we'll get tomorrow out of the way. That'll be the big thing. Get tomorrow out of the way. That way we have one less thing to concern us. We'll look for trends like Netflix. Netflix looking good. Broadcom pushing higher. All the FANG stocks seeing short covering. Microsoft, no follow through. Okay, we've got 2 minutes to go. 2 minutes to go for the closing bell. Redfin, watching that one for potential. Enphase closing at the high of the day. Enphase closing high of the day. Okay, Enphase, HPE, ditto. High of the day. Bullish bias for tomorrow. You got Moderna, you got Synchrony Financial, you got United Rentals closing at the high. URI, high of the day, ditto. Okay, we're neutral going into the Fed. That's good. I'm glad to see that. Glad to see that. So the institutions don't have to come out and start selling like crazy. Yeah, Netflix looks good. 1 minute to go. Netflix. Netflix.
Yeah, we talked about that in sort of mid-late August, and 10-year, we liked extending duration, we liked owning the 10-year. I think a bunch of that is priced in at this point. When you look at the shape of the yield curve, I think we're about 120 basis points.
Netflix following through. Okay, so that's it, folks. That's it for me. Hope everyone has a good evening. Take care. Have a great one. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, looking for Netflix to break higher. We will see you tomorrow. Have a good one. Got a hard stop. Take care. Ciao.